Hi guys, welcome to our channel. So today will be quite special because I'm going to share 11 mistakes that I made as a beginner in investment. So hopefully after I share the 11 mistakes that you can give a reference for yourself so that your investment path will be smoother. That's it. So with that being said, let's go. So first of all, if you are new to my channel, hopefully you can click the subscribe button and the bell so I can notify you when I have new videos. So the other one is the Facebook page, and you can like the page so that I can push the videos in front of you, in your cell phone, in your computer, in your screen, okay? So I see that our subscribers is growing from 4 to 40, I guess. So I heard that some people said that is pretty good already. So because I didn't do any fake accounts, I didn't buy any likes. So I really like it to be clean and really authentic for the fans, for you guys. So the last thing is hopefully you can smash the like button for me so I can see you guys really exist, or even leave me some comments so I can see that those 40 people or more than 20 people who watch my housing education, right? So hopefully you guys show me that you guys are real, like human, okay? So that I know I'm not talking to a machine. Please, okay, leave me a comment. So the first mistake is target, right? Let me tell you an example. My girlfriend lost her cell phone. So as a man, I said, oh, that's okay. I can earn it back in the investment in the stock market, right? So how can you do that? I said, let's go home and I'll take care of that. Because the target is so short, so that I don't really have time to wait for any valuation to reflect. So I force myself, not that I have to focus on the Y, like the price, I also have to focus on X. So the disadvantage is on me. So in the end, this example, I lost my whole bank account for 70% in 2 days. So that's a really bad example. And the worst one is that girlfriend is not my wife. So well, okay, that's a good lesson, okay? Second one, without a schedule. So let's say you have a good dream that you will have a cup of coffee beside you and do a study in the morning, and then you will look around the stock markets around the world in the noon time, because in the Eastern time at noon is the break time. But in the US time at noon is usually when DAX and stock market in UK, in the British stock market closes. So that gives us a big reference and hint of how the afternoon market will go. So you can set all the schedule, all the time to trade and to study. But in the end, you didn't put it into action, you didn't mark down in the mobile phone, in the calendar, then in the end, you will be losing your money not because of your skills, it's because you didn't have the discipline to execute, to carry through all the things. That happened to me. So that's really suck. That mistake is really not investment related, right? The third one is forcing versus waiting. What does that mean? Forcing means you can force yourself to study and you have a high score at school. You can force yourself to work hard. Probably you'll get a promotion. You can force yourself to love your wife. No, don't do that. You can force yourself to exercise and you will get like slimmer, like have muscles and healthier. But you can't really force yourself to earn money in the stock market. Trust me. Because in stock market, you have to wait. Just like planting a seed. Watch it, you can look at it and grow. Grow until it becomes a tree, and then you might have some apples or orange above, but you will just wait for the plant to grow a bit and you cut it off. So you won't treat your investment like that. You won't force investment like that. You will only wait because you know with valuation model, with all kinds of stuff, you know that 90% of the time you earn money because you wait. That's the key. 4, to diversify. Now, I understand why you will get too diversified in your portfolio, because you don't really have the confidence on what you've done on your homework. Because I say, oh, Donald Trump is now the president, it will really benefit the insurance industries. Oh, but I don't know, should I buy Geico or the other stocks, so I buy both. That's really a big mistake, because in market-wise, if there's anything happen to the industry, your risk will be double, but your return will be the same. So trust me on that. Don't get too diversified. Number 5, do too many technical analysis, like chartings, butterflies, triangles, scan theory, wave theory, gap theories. You can list all the things you know on the chart. But in the end, you won't see any candles and you won't see the real pattern because it's all blacked out, right? So people do that, right? It's really cool, right? But in terms of how you execute on the stock market, it's really BS, right? Because how we apply technical analysis is whenever there's any level, anywhere that there's a consensus in the market, then you will see some overlap patterns in all different kind of TAs will overlap at the same level, right? But for those that only one or two happening in that area, we'll just give up. Because ultimately, you want to earn big in the business. You won't be like quitting your business and selling off your business company because of only a little risk, right? After all, it's point one. What is your target? Is it long term or short term? If you're playing long term, then the X, remember the chart, the X, the advantage is on the side. Number 6, you ask too much. So there's example in the tech bubble, because I've been investing for 20 years. So during the tech bubble, all the FA like discounted model, PE, like wave 3E, stuff like that, all will work because the stock markets were really crazy. So we'll ask around, so how do I judge a company whether it's expensive or like it's undervalued? So he said, oh, by your eyes, there's a method called the eyeballs theory. So that by looking at the counters of the websites, then you will know the valuation of the company. What? I mean, yeah, like that could be a little like reference, but what the hell is that? So in the end, I lost my money. So if you have your skill set to long for something in the long term, the main direction, you know that the industry is good, do your homework. Sometimes too much comments, too much opinions will distort your own thinking, because portfolio is really a unique thing for like individuals to invest to create his or her own portfolio. It's not necessary for the world. If not, tell me why. By looking at the same chart, someone can lose money, someone can gain money, someone can profit. Why? Because of the strategy. Okay, the next one is thinking the rich people or the tycoons too big. We always think that rich people can do a lot of things. They can buy and sell, they can move the stock market, they can move any stock price up and down. That's not necessarily the case. I used to study lots of analysis of the, like in the east side, there's some wind theory, okay? And the western side, we used to look at the level, second level, third level, and used to memorize the numbers. And lots of things like that. But when you get richer and you get closer to people who are really, really filthy rich, what they're doing is to just invite a bunch of friends, sit in Starbucks or like Penthouse, and they have a meeting and they decide how they're planning to earn money from all kinds of amateurs in the stock market. And you won't know that. Because of why? If you know that, who the hell they're going to earn money from, right? Who the hell they're profiting from? You guys, me, right? So the second thing is, even rich people in institutional like fund managers, they also lose money. So I say that I haven't been using this analysis for a really long time. Why not just focus on some macro stuff? Let's say if North Korea firing a bomb missile to like South Korea, this news, when they come out, all the rich people will react to it. So why not we just do something more in-depth, study more about non-farm, PMI, unemployment rate, theories. Okay, yeah, sure, technical analysis, sure, but maybe less time of analysis of the institutional money flow and fund manager stuff, right? Number 8, too emotional. I know we always know that, all right? So let's say there's an example that I've been waiting for access to that price for a long time. In the end, we waited for too long, the price didn't hit that level, and then okay, anyway, I just buy it, okay? You try that? For example, we're waiting for a day for a stock to come to like $5 for like 6 months. In the end, it hits $5. We suddenly, that day, we change our plan and we suddenly buy a lot more because we hate waiting, okay? That's wrong. If we get too emotional, let me tell you that the day that you're going to make the execution, your IQ and EQ is the lowest. You will be like, look at things blurry and it's really bad, okay? So the only moment you're functioning well, the only moment that you're functioning the best is any day before that day, okay? So just write down the strategies, write in pencil and pen or iPad, and that day just follow the execution, mainly, okay? Like 99% follow the execution. So you won't be like challenging your emotion too much because everyone has emotion. So even you're 10, boys, girls, old lady, 80s, whatever, we all have emotions, right? So we find some way to deal with that. The only people that will fail and fail again in this point is those who think they're emotionless. That's really wrong, right? So we have to fix that. For example, in 2008, we have set a level for Hong Kong Hang Seng Index and Dow Jones Index to hit that level, and then we will like really buy it. That's 2008, October 28th. It's the bottom of the Hang Seng Index. It's almost the bottom of the US Dow Jones Index. So that day, you know what we did? We all say, okay, stand up, move one seat to to the right, okay, execute that. You get what I mean? So we help out to execute because we have the deal, we have the logic, we use the most logical time period to study and find a solution so we can execute. The next one is that we want to be successful people too soon. That is a problem because we have different targets and requirements of investment and lifestyle. Some of you may say, oh, buying a new car, Lambo, and Rolex, and Prada, stuff like that is successful. Let me tell you, you will get married, you have children like me, you have 2 kids. By the way, if you haven't had kids, really consider. The reality is my expectation is the worst of my expectation and also is the best of my expectation. So I'm going crazy, but it's really good feeling. You have to prepare for this lifestyle. And if you won't be getting married any sooner, you will definitely get old. So that's the lifestyle. You want to evenly distribute your wealth over the lifespan of your life, right? So for me, example is my story is I have great debts coming from Canada back to Hong Kong, almost like a bigger debt. So in the end, I started profiting. Then first thing I did is I bought a BMW 330 CI convertible. I remember it felt really good. When I started engine, whoa, the sound is like, it's still in my heart. So what's wrong? That's successful? No. 10 years later today, I think that's only a checkpoint of my life, but I lost all my money at the time. So thinking about in my return that I did in doing this 10 years, if I had that money, then today I can buy the house already. So that's really true. Unless you think you can't do this return, unless you don't think you have the ability, unless you think you're stupid, okay, right now, you earn $1, you spend 2. Right now, let's go, right? So that won't be the fact, right? Because no one by default is useless. Everyone by default can make something happen. So number 10 is wrong tool. I would say that you won't be cutting your orange using machine guns. You won't be going to wars with knives, right? So that's really what the tool is. Option futures, leverage, FX, stuff like that. They all have their specific goals and targets and how to use them to maximize the efficiency, how you profit in the market and minimize the risk of what you're going to invest. So what kind of tools you really have to study? So for me, I tried one time that I see the gold price hitting some trends, it will go up higher, then I'm not buying gold. I'm not buying paper gold. I'm not buying ETFs. I'm not even buying gold stocks. I'm buying the warrants and options of the gold stocks. That's really bad because option is X and Y also. It's another topic. So if you want some more about options, you can leave me some comments down below. So what I mean is you really have to study the tools. Not that, oh, this chart is going up, then I can use all the tools and I can benefit. Sometimes tools have time restrictions. Sometimes it doesn't have time restrictions, but you have to fulfill the agreement, stuff like that. Really detailed. So you really have to think about what you're going to buy. The last one is, remember to like and share, please. Okay, the last one is number 11. The last one. Mainly happen to men, less likely happen to women, but not necessary. But it's definitely happened on me. So thinking that you know it all, wow, that sucks. Not even like 0.1 to 10 can save you. Like that really sucks. You know, I study engineering, so the average score I needed is 90. Remember my average 94, right? My friends are 95 and 6. So I answered spin copy and used to having some confidence saying that I'm smart and stuff like that. But you know what? Investment is different. So you're smart, it's useless, almost useless. Why? Because also the stock market is a bunch of like massive people, how they think, how they react, how they benefit, how they interact is not about you. If you're smart, there's nothing to do related in the stock market. If you're smart in investment, do it like that. Try to guess and anticipate how people will react to certain news and economic data, okay? That's the point you will really have to study. Second one is, in the stock market investment world, mainly, not all, mainly is driven by emotions, behavior, and anticipations. Those are not anything about quantitative analysis. Those are not about IQ. They're all about EQ. You understand what I mean? So hopefully I shared some of my experience. Regardless that I don't really speak English well, but hopefully you understand because I still believe investment is global, is international. So I really appreciate early comers, early friends. If one day our channel grow bigger, I'll definitely find your address and treat you some dinner. Maybe you treat me dinners, right? Because if I said something right, okay? So I really appreciate the time. I really appreciate your likes and subscriptions. So hopefully I can see some likes and some comments below. So if there's any problem or anything you want me to talk about specifically, you can leave me some comments below. So see you next time. Bye-bye.